Welcome to our daily solo 401k webinar and Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic: what is the difference between self-directed 401k and solo 401k? So a solo 401k, when you compare it to a self-directed solo 401k, is often referred to as a basic solo 401k. So basic means that it's got limited features. So the plan has limited features. And those type of plans that have limited features are typically offered by big discount brokerage firms like Schwab, Fidelity, E-Trade, T. Rowe Price, even those offered by banks directly or indirectly, like Wells Fargo, Chase Bank, insurance companies as well. So those are often referred to as typical basic solo 401k plans because they are limited. So when people refer to a self-directed 401k or self-directed solo 401k, they are usually referring to a more flexible, feature-rich plan like the one provided by my solo 401k financial. So by contrast, the solo 401k at a brokerage is typically more limited in functionality and control. All right, so this is your chance to get answers. Use the chat to ask questions on today's topic or anything else. Chat them over now so that we can be sure to get to them all. Let's get started. So why does this topic matter? That is, what is the difference between a self-directed 401k, aka self-directed solo 401k, and a solo 401k, often known as a basic solo 401k plan? Well, there's a lot of confusion out there. We speak to clients all the time. We answer email inquiries all the time regarding prospective clients, and they're oftentimes confused by the word self-directed 401k or self-directed solo 401k versus solo 401k. So understanding both can unlock various types of investments like real estate, cryptocurrency, precious metals, tax liens, promissory notes, and of course the mega backdoor Roth solo 401k strategy. So essentially, the differences really come down to two items: control and eligibility. So let's talk about a solo 401k, a basic solo 401k. So some of the common characteristics entail it only allows for example, for pre-tax contributions, or maybe just Roth contributions, or maybe both, but it doesn't allow for the mega backdoor Roth strategy. So it doesn't support voluntary after-tax contributions, for example. It may not allow for in-plan conversions. Let's say you want to make a voluntary after-tax solo 401k contribution and then immediately convert it to the Roth solo 401k or the Roth IRA. It may not even allow you to transfer IRAs or former employer plans to that solo 401k. It may also not allow for solo 401k participant loans, and it may not allow for alternative investments like the ones I mentioned: real estate, precious metals, and so forth. That's typically what a basic solo 401k is. And oftentimes, you may not be able to direct your own investments. You may have to hire a trustee to perform those functions. So a solo 401k, just like a self-directed 401k, aka self-directed solo 401k, is for the self-employed. So you have to be self-employed in order to open one. So a solo 401k is essentially ideal for those who are freelancers, contractors, consultants, or if they have their own business and it's just the individual and his or her spouse, and they don't employ any non-owner full-time W-2 employees who work 1,000 hours or more. You can always exclude those who are under age 21, regardless of how many hours they work. So let's talk about what a self-directed solo 401k is, aka self-directed solo 401k. So this is what you get when you set up a solo 401k plan that's self-directed. Basically, you have more flexibility in that it supports all contribution types, both employer pre-tax, employer Roth, employee pre-tax, employee Roth, voluntary after-tax solo 401k contributions as part of the mega backdoor Roth. And of course, it allows for end plan conversions. And you can also borrow from the plan by taking a solo 401k participant loan, where you can borrow 50% of the total solo 401k balance, not to exceed $50,000, and you pay it back. So you pay back your own solo 401k, typically over a 5-year period. It can be extended to a 15 or 30-year period if those solo 401k participant loan proceeds are used towards the purchase of your primary residence. Also, self-directed means that you're going to be able to choose where to hold your solo 401k funds at. So when you open a self-directed solo 401k with my solo 401k financial, you get to choose where to hold the solo 401k funds, whether at your local bank or a brokerage firm. And then my solo 401k financial will shepherd you through the process of opening those self-directed solo 401k holding accounts and calculating the contributions and even helping you to transfer IRAs or former employer plans to the account. So with the solo 401k, you essentially combine eligibility and flexibility. And then you're going to have checkbook control to be able to make investments in those alternative investments, like I mentioned, real estate, cryptocurrency, precious metals, and so forth. And of course, you're still going to be able to invest in equities, stocks, index funds, and so forth. So a lot of times, it's important to understand that a solo 401k is really more of understanding that you have to be self-employed to open one. But if you want to be self-directed, if you want it to be a self-directed 401k, it's still a solo 401k. It's just that it's self-directed, which gives you more eligibility with regards to what you can invest in and the types of contributions that you can make. And there's also a couple other features that we talked about. So solo 401k loans, and we'll talk about the auto contribution credit in just a little bit. So before we continue here, if this information is helping you to feel more confident about your future, please take 1 second to like and subscribe. It tells the platform this content is valuable, which helps other solopreneurs like you to find it. Subscribing guarantees you get notifications of all our crucial content that we deliver every day to help you secure your retirement. So from the compliance and IRS regulations, all solo 401k plans, whether a basic solo 401k or a self-directed solo 401k, must follow compliance regulations and of course IRS regulations. So you have to be aware of prohibited transactions. For example, if you invest in real estate, let's say you want to invest in a rental property, with the solo 401k plan, the solo 401k will take title to that property. you cannot use that property for personal or business use. If you own that property personally already or through your business, you cannot sell or exchange it to the solo 401k. That's prohibited. So those are things to be aware of from an investment perspective. You also need to make sure that you file any required tax forms with the government for the plan. For example, when you take a distribution or once the market value of the plan exceeds a certain market value. So here at my solo 401k financial, we offer self-directed solo 401k plans. And as part of our ongoing support, we don't charge additional annual fees for the following services. So the following services are included in our annual fee. And as long as you timely request these services, we'll gladly complete these services for you. Because here at my solo 401k financial, we never have access to our clients' funds, and that's by design because the individual may not be comfortable with having their solo 401k provider having access to their funds, which we fully understand. And as a matter of fact, we don't need access to your funds to help you make sure that your plan is in compliance. But you do need to make sure that you reach out to my solo 401k financial when you need compliance support. So, for example, when you process a distribution or a conversion, like to make it back to a Roth conversion, that results in having to file a Form 1099-R with the government to report the distribution or the conversion, or if you transfer funds out of the solo 401k to an IRA or a full-time employer plan, that would also trigger a Form 1099-R. And as long as you timely request that service, we'll file that with the government for you. Also, once the value of the 401k is greater than $250,000 as a year end, or if you close the solo 401k plan regardless of value, you have to file a final Form 5500 easy for that plan. And again, we'll provide that service as long as you timely request it, and we will not charge additional fees for that service. We'll also assist clients in opening bank accounts or brokerage accounts to hold their solo 401k funds, whether when they open the plan or later on. We'll also draft the solo 401k participant loan documents. When you borrow from the plan, where you can borrow 50% of the total balance not to exceed $50,000, it's got to be done after you sign specific loan documents. You can't just create some Word document or jot it down in the back of a napkin. You have to have specific IRS required participant loan documents that we'll draft. Also, we'll assist you in calculating contributions. Let's say you want to make a contribution to the solo 401k plan, whether employee, employer, Roth, or voluntary after tax. We'll gladly assist you with those calculations. Now, our plan also comes with a $1,500 credit, which is a way of the government to essentially subsidize the cost of having a solo 401k plan. So the $1,500 auto contribution credit is available to both new plans as well as existing plans. So if you have a solo 401k plan at another firm, you can restate that plan over to our plan, and we'll add the $1,500 auto contribution credit to your plan. If you're an existing client, this auto contribution credit wasn't available till January 1st of 2024 and after. So if you're a client prior to that date, submit a support ticket on our website and we'll go ahead and add that auto contribution credit to your plan once you submit that support ticket. Let me share the link to that support ticket for existing clients that would like to have that auto contribution credit added to your plan if you open the plan with us prior to January 1st of 2024. Now, the auto contribution credit, even though it's called the auto contribution credit, you don't have to contribute in order to take advantage of it. You just need to make sure you have a plan from a company like my solo 401k financial, who offers a solo 401k plan that comes with that feature along with the applicable schedules. So it's a dollar for dollar tax credit equal to $500 per year for a maximum of $1,500 over 3 years. So Again, it's a dollar for dollar credit. So with these tax credits, the cost to open and maintain a solo 401k is practically free for many years to come. So, and it's also not a deductible expense, but rather it's a dollar for dollar credit. So it reduces your business taxable income on a dollar for dollar basis. And all businesses qualify, whether it's a sole proprietorship, S Corp, LLC, partnership. And you can actually opt out of contributing to the plan, and you're still going to be able to contribute in whichever amount you want to up to the overall limit for the year, which is $70,000 for tax year 2025 for those who are under age 50. So, in short, you're not required to contribute in order to qualify for it, but you can still contribute. We'll provide the necessary forms, and the necessary language will be embedded within the plan to allow you to claim this auto contribution credit. You're going to claim it by filing Form 8881 with your business tax return each year for a total of 3 years and $500 amounts each year for a total of $1,500. And we'll provide a video presentation on how to file that form along with a PowerPoint. It's only a 2-page form, so it's not that complicated to fill out. Okay, looks like we've got some questions here. If I have a W-2 job and contribute to my employer's 401k, and I also have a real estate LLC and perform that on the side, can I set up a self-directed solo 401k? Since the LLC is myself, it's for my self-employed business. So yes, you can contribute to multiple 401k plans. We have a large population of clients that contribute to their full-time employer plan, such as a full-time employer 401k. And then they also have a business on the side, and they also contribute to the solo 401k plan. Contributions to the solo 401k plan would be based on your net self-employment income from your self-employed business. So you need to make sure you're reporting enough earned income from self-employment activity to be able to contribute to the solo 401k plan. And if you want to contribute the full allowed amount for the year, which is $70,000 for tax year 2025, you need to make sure you have enough net self-employment activity to justify that contribution. Now, from a contribution perspective, where you're contributing to both a full-time employer 401k for a business that you don't own, and then contributing to a solo 401k for your self-employed business, you need to make sure that the contribution types, so employee contributions are aggregated between your daytime employer 401k and your solo 401k. The employee contribution limit for tax year 2025 is 23,500. You can't go over that amount between your daytime employer 401k and your self-employed solo 401k. However, employer contributions, also known as profit sharing contributions, those are not aggregated between your full-time employer 401k and your solo 401k. So you can make employer contributions to both. There's also the voluntary after-tax solo 401k contributions as part of the mega backdoor Roth. Those are also not aggregated between your daytime job 401k and your solo 401k. So, for example, if you have enough net self-employment income from your self-employed business, and let's say you want to solely make voluntary after-tax solo 401k contributions as part of the mega backdoor Roth, and if you have enough net self-employment income from that self-employed business, you could contribute a total of $70,000, even if you've already maxed out your contributions to your daytime employer job. You can contribute $70,000 in voluntary after-tax solo 401k contributions to the solo 401k and immediately convert it to the Roth solo 401k or the Roth IRA. So talk about really supercharging your retirement savings by contributing to both your full-time job 401k and then your self-employed solo 401k plan. So it does pay to be self-employed after all. All right. So looks like we don't have any other questions. We're about to finish here. If you haven't already, go ahead and type over your questions, and we'll go ahead and finish answering those before we finish with today's webinar. So again, some of the highlights of having a self-directed solo 401k is that you can make high annual contributions, $70,000 for tax year 2025, for example, for someone who's under age 50. If you're age 50 or older, you could even contribute a catch-up amount of $7,500 on top of that $70,000. There's also a super catch-up amount effective for tax year 2025. So if you're age 60, 61, 62, or 63, you could make a super catch-up contribution amount of $11,250. You can do both catch-ups, but you could qualify for that $11,250 catch-up contribution. However, if you fall within that age limit of age 60, 61, 62, or 63. So those are some of the highlights. Again, you can choose where to hold your funds at for the solo 401k. You can also borrow from the plan. There's also the Mega Backdoor Roth strategy available. The $1,500 auto contribution credits available as well. So the self-directed solo 401k is a great retirement account vehicle for those who are self-employed. Well, that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here again in a few hours to cover more crucial content and to help you secure your retirement.